Great stuff. Okay. How's everybody this morning? We are going to have a look at some bits and pieces we can look for next week. Hi, Sang. Hi, Catherine. Yeah, great stuff. Okay. So let's share screen to start with and talk about really the way that we're going to get some ideas. We've got a little bit longer, so we can discuss kind of, some of the ways that it might be worth getting some ideas of the week. Now, is everybody kind of getting ready for next week? How does everybody feel about next week? Have you got some ideas about things that you can trade and things you want to trade? The process should be that you are going to look at longer term charts. Brilliant. Okay, Catherine, amazing. Right, so the Swiss, the CAD Swiss. Now, what we want to sort of also think about is what's the state of the market? How's the market right now, and why is it doing what it's doing? Has anybody got any idea of some of the reasons that certain currencies are moving in a specific way, and some of the indices and some of the commodities are moving in a specific way? Anybody sort of had a think about that? Because if we can assume straight away the market sentiment, then that acts as, yeah, well done, exactly, Catherine. The Credit Suisse debacle is exactly the main issue really right now. So when there's panic in the market, and that's what we've really seen, there's panic in the market. And oftentimes when we're thinking about currencies, what is driving those currencies is interest rates and interest rate differentials and interest rates expectation. Where is the central bank of that particular country that holds the currency? What are they about to do, and why are they going to do it? Which is why we kind of go through little bits of data to try and understand why they might start to shift on interest rates. And if they shift on interest rates higher, they put interest rates higher, it will make their currency more valuable. If they lower the interest rates or leave it stationary in comparison to others, it will devalue their currency. But right now, what we've got is this problem with Credit Suisse, as Catherine says. So we've got this potential contagion issue with the banking sector. Now, what that tends to do is push people towards the yen and the Swissy, because they are safe haven currencies. And if you look at what's been going on with the Swissy, we look at this on the dollar Swiss, and let's have a look at, let's have a look on the weekly. So you can see last week's bar, downside here. Aussie yen, downside on Aussie yen. So you can see that the yen is very strong. Now the yen, I think, was the strongest currency last week. That's the CAD yen. There's the Swissy yen. The euro yen. Now the pound yen is quite interesting, because when you look at the pound yen, the moves aren't quite as expansive, which suggests that the pound actually is coming in not too weak against the yen. And the other one as well is the Kiwi as well. Kiwi was actually pretty flat against the yen. So the Kiwi is the strongest other currency. The yen's the strongest because it's showing upside against all the currencies, but the Kiwi is actually the strongest other currency. Which kind of suggests that we should be maybe making a case as well for the Swissy. If we look at last week's data, if we're sort of like last week's price action, if we're thinking about what might carry through to this week, then we could definitely look at more yen, and we could definitely look at the Kiwi. So if we think about the yen to start with, what I'd now want to establish is, are we at an area of support and resistance, with any of these? Is there further to go? That's the really real question. Now, let's start with the dollar yen. And if we think about the dollar yen in, and you're thinking about kind of price action, then really all you're ever trying to do is you're trying to find where support and resistance is. And the reason that you're trying to find where support and resistance is because if you can find support and resistance, you can find where a currency is strong or weak. The dollar is weak. You're absolutely right. Now, seasonally, The dollar was the weakest last week, and it continues this week. Seasonally, this week, the strongest currency is the CAD. Now, I'll be interested to sort of see what happens with the CAD this week. But let's continue on with the yen. The yen isn't particularly strong seasonally. It's actually pretty flat going into the end of March. So the question is this at a point now of support and resistance, or is it somewhere in the middle? Now, what you can see on the dollar yen is that there is probably a level of support here. So it looks like there's a little bit further it could go. And then there's this support level down here as well. So if this is to continue to drop, it's going to drop and drop down here. What would be better is to see, if we want to sell this, we don't want to be selling near a support. We want to be selling near a resistance. And that resistance line is going to come from this level here or this level here. So this is the sell zone. Starts between 133.17 to 134.27. So looking for potential dollar yen short. So Robert, you're saying that the dollar is weak. The yen from last week is the strongest, and we've still got this potential contagion problem. And until that's sorted out, the likelihood is the trend continues because the trend in the data or the trend in the sentiment is likely to continue, and unless somebody comes out and says something. So with the dollar yen, what I'll be looking for is a push up to start with. I wouldn't want really sort of this to, I wouldn't want to get involved if it's just coming straight down. It could come straight down, definitely could come straight down, but it would be better to see a little push up early in the week, and then start to put, see if we can get into, some sort of pattern around there and see if we can start to trade that one to the downside. So this one is an option. So we'll be looking at potentially dollar yen short still next week. And the CAD is coming out seasonally as the strongest. Now, this doesn't look like it's got that much further to go. If you look at the CAD, looks like it's and look at this lovely trend line along here. Broke, retested, gave a signal. So this would be a level of resistance, and then you'd be looking for signals to the downside. At this point, the good thing here is that you're with trend. The trend on the weekly I'm on right now is to the downside. So really, you'd try and want to get on the downside with this one as well, and maybe a push up to this area. Now, it doesn't look like there's that much further to go. So a bounce could be in order, and it could be relatively soon that we could get a bounce to the upside. And then it looks like CAD yen maybe to the downside from there. But it might not be this week. It might not be as we kind of go into the tail end of March, because the CAD is, as I say, the strongest currency going into the tail end of March. But we could look at the dollar CAD. Knowing what we know about the dollar and what's going on, we could look at the dollar CAD for a short. Now, the reason, now look at that, right on resistance, and we're just looking for signals now that this could weaken. Inside bar on the weekly. So there is a couple of things here that suggest that we may well have some resistance. So now what we want to do is see if there's any price action on a shorter term time frame that gets us into this one. So you're absolutely right on this one, Robert. The dollar does seem to be one of the weaker currencies right now. And we'll have a look at that and see what the evidence is actually first. Let's have a look. So last week, Aussie dollar went long. Dollar Swiss was long. So actually the Swissie is weaker against the dollar here. Pound dollar was long, is green, so that's long. Dollar CAD is weaker. The euro is not particularly good. So neither the euro or the Swissie are particularly strong currencies. Kiwi dollar went long, and then the dollar yen went short. So the dollar is around about third from the bottom. So we could be looking at CAD Swiss maybe, and we could be looking at CAD Euro, and we could be looking at dollar CAD as in line with the seasonals. Much more difficult now with the yen, because the yen's kind of had a bit of a move, so you're jumping on a little bit late with that. So what we're trying to do is catch a turn. This one would be early. If you manage to get in short with this one, it'd be quite early. Now let's have a look on the dailies. Now, when we look at this on the daily, what do you see on the daily? Do you see a potential for a lower high, or do you see this as an uptrend? Do you see this as an uptrend and potentially going through, or do you see this as a maybe a lower high here? What do you guys see? Robert sees lower high. Cool. Anybody else? If you're confused, let me know if you're confused. And we'll just have a quick look at the price action. Lower high, okay, Lionel, yeah. Yeah, cool. Okay. All right. So Catherine saying potential rings high, not lower high until I see another rings high. Cool. Right. Well, the right answer actually is both. You know, that there is potentially this could well be a support level that goes to the upside, but it could also be a lower high. It's not confirmed really until we see a lower low, and the range, because this started here, was red, and then it found support. This is really the range. This whole area is the range, and because that is the range, we haven't yet had the lower low. You know, all we've really got is some negative price action up here. So there's two ways we can play this really from this point. We can stay on this time frame, and if we stay on this time frame, then we are probably looking for this area to be taken out to the downside. And if it is, then we can look for opportunity short. So what we'd want to see is something happen. So it takes out the low, takes out that area, comes back into the area, and then we could be looking here. So that's at 1.368. Around about 1.368. It's but basically the close, and I use the closes rather than the wicks, unless the wicks kind of you know, add some extra information. And actually, when I look along here, I can see there is some information, but it's going to be better to look on this in a 4-hour. So this is option one. We wait for a break, wait for a retest, look for a reversal pattern in here, and then try and get on the short on the dollar CAD. That's the safest option really, because that gets confirmation. Now, the other option is that we go down a time frame to the 4-hour, and with a 4-hour we see something different. We do see this area of support here. We see this area of support here. Now, bear in mind, the CAD is the strongest seasonal currency going into the end of March, and the dollar is the weakest seasonal currency. So this is one of the reasons we're considering dollar CAD here as a short. There's no COT data that is up to date, so we can't use that. So this here was the support level, support, then it was a breakdown, then we get the lower high. This continued to the downside, but then we got the higher high. It proved to be a false break, and now we've got this just a little bit, it's a bit messy in this area here, but this area here looks like it could well be good enough to create some decent resistance there. So now we've got to draw some trend lines, and I'm going to use the low ends here. Maybe this one here is better. And what do we get? All right, we want to tighten this up as much as possible. It looks like the trend line's about there, which does suggest that's the trend line there. Now this will coincide with that daily low as well. So we'd really want to see this breakdown and retest this trend line. And that would now start to suggest that we have a pattern, and that pattern is probably here. So I take these other lines away. What we have is this triangle pattern. Let me just get rid of these other levels so it's a bit easier to see. So that's what we seem to be having. It's like it's a squeeze going on, really. Now this might even be starting there. Might even be able to do it starting there. That's cleaner, isn't it? That's much cleaner. So we got this triangle pattern kind of going on, and it's getting very, very close to the point where when it breaks out, either side really, it's going to suggest going in that direction. Now, because the dollar CAD is suggested to be seasonally a sell rather than a buy, we've got one thing off the charts which suggests that we should be looking really for this to sell. So if the dollar CAD gives us a break to the upside instead of the downside, if it does this, the reason I would not be looking for longs is because the seasonal suggests that we could be fighting against it. So that would just be off the radar, just wouldn't bother with it. Or it could suggest that we are actually not completed this pattern and we should be maybe looking to change the pattern. So it might be one of those things. Either way, it will still be within the pattern and we wouldn't be interested in it anyway, because what we really want is for the pattern to break down. So so if this was to happen, then the dollar CAD will lose a little bit of validity, and we might not be quite as interested. But if what we need to happen really to kind of give us a bit of extra confidence is this, that would be taking out these lows here that we saw on the daily and the trend line, then it would push back up again. And we could look for reversal patterns still in the same area here, but on a 4-hour chart instead. Stops probably at the highs, but we need to make sure that our target is probably going to be somewhere around about this monthly pivot. So if we're going to be taking this trade in that area, that's going to be around about 160 pips. Now, if 160 pips is down, that means we can use the trend line, no problem at all. Right to the highs, little bit too far, so we couldn't use those highs there if we're going for at least a 1-to-1. So we've got to consider where our targets are going to be with this. It does look like this might well be a problem here, because it looks like there's some strong support here. So that would be the more conservative target. Going for the monthly pivot, it's only going to be 30 pips away from that. But it might be a little bit more dangerous depending on what's driving it. That's really what we're looking at here. So if we get into that area, we're really looking at a profit of around about 130 pips. So that means that the maximum that we'd be looking for upside if for the top end, if we're 1-to-1 traders, is 130 pips. 2-to-1 traders, we're looking at 65. So so that would put us just around about the top of the trend line. But this is what I'd be looking for next week. Break to the downside on the 4-hour, close back up here again, and then we can look for trades lower on the dollar CAD. Now, if there is some extra information, we want to use it. So let's see if there is anything with the dollar CAD which would enable us to kind of get something else that's off the charts and utilize it to our advantage. So now I'm just going to open up. Now it doesn't matter if you use Forex Factory or Trading Economics, or whatever it is. It doesn't really matter. I'm going to use investing.com because it's my favored one. Now, if we look here, let's get these off. If we look here at next week's data, there's very little that is going to be moving the market on Monday. So that suggests maybe, similar moves, possibly. It could be just a little bit of a bounce. Different things could happen on Monday. Retail sales from Australia on Tuesday could move the market. We do get dollar news. We get US news on Tuesday. So this could be a driver. This may well be a driver for that dollar CAD. Pending home sales, another potential driver for the dollar CAD. Is this the right week? No, sorry. Wrong week. Wrong week. I wonder why we weren't seeing the CAD thing. I saw CAD data earlier on that I thought might be of interest, but yeah. So sorry, no, forget that stuff. It's not that. Reserve balances with the Federal Reserve banks, maybe a bit of a mover, but nothing major. This is the driver for next week. The CPI data from Canada. So what we have now, when I'm starting to build a case for a potential trade for next week, what we have now is number one, we have a seasonal bias in our favor. We have a dollar short and a CAD long, because the CAD tends to perform the better of all the currencies towards the end of March. As we go into April, the dollar tends to be the weaker. So we got the right balance there. There's no COT data up to date, so we can't utilize that. But what we do have when we go to the charts is on the weekly, we get this resistance point. So we are at resistance. We are in a sell zone. Anytime we're in resistance, it doesn't matter what the trend has been. If we're at resistance, we're in a sell zone. But for it to become a selling opportunity, we need to see that sell zone play out in a specific way, i.e., it needs to give us price action, which is turning around. What we had last week was this inside bar, which we know is a bearish signal. It's a reversal signal, bearish inside bar. You guys learned that from IFP straight away. So this is a bearish inside bar on the weekly. Then if we go to the daily, do we have a lower high? Maybe. You could argue it, no problem. I wouldn't have a problem with that, but better to get under this level, because that's a really strong level of support. So that's the price that we'd be looking at. That's first target. If you are a Jaguar or a Polar Bear, you'd be looking for even further down, and you may well get it as well, because there's trend lines down here on the weekly chart that you could be looking for. There's this horizontal level down here that you could be looking for. So there's lots to aim for depending on your on your approach. But what we do know is that every single approach is oh, sorry guys, sorry, not seeing the chart. Yep, here we go. So what we have here, just going to go over it again. So we know with the seasonals and with the seasonals, we've got a bias. We've got dollar short and we've got CAD long. Okay, so now what we've got is on the weekly chart, we've got this inside bar from last week. Now that inside bar tells us, as I said before, we learned that from IFP, that tells us that this is a reversal. This is a potential reversal, and we're at resistance because we've got this trend line. So we're at resistance, and there's a horizontal level here as well. You look along there. There's this horizontal line there. Could be a little bit higher, but it's in the zone. So we are in a sell zone, and we're looking for, after we see a resistance point, which is a sell zone, we need to see resistance play out on the price action. Last week's bar gave us that. Then when we go down a time frame, we get this cluster here, which could still be bullish, and that's why if we take out this one here, yeah, short dollar CAD, you got it, Robert. If we take this area out here, that's going to suggest that we could be coming down. If we don't take that area out, then you may well get, now you could get a better price if you get in short up here. Of course, you get a better price, but you got a little bit of a risk. The risk is increased because you haven't got much to aim for. Of course, you could go short here and take your profit here and see if it goes through. So there's a few different ways to play it. The way I'd be more comfortable playing it would be take this area out, because it's a really strong area of support there. Now, the best way for me would be look on the 4 hour. Does the 4 hour give me something which would suggest a pattern? And I do have that, because on the 4 hour, on the 4 hour, we've got this, which is our triangle pattern. Now, the triangle pattern still needs to take out this low. The other thing we need to do, measure the move. We go from the top end of the triangle right down to the bottom. And depending on where it breaks out, it's going to suggest what it's going to give us. Now, look at where the triangle suggests. If the triangle breaks out, it suggests this area here. So what we have now are hunting dog traders able to get in because there's plenty of room. We've got falcon traders able to get in because there's a one-to-one there. Actually, if you look at the stops at the top of the triangle there, that gets you even before you've reached the monthly pivot. There's the falcon. Whoops. The Jaguar is going to be here, and the polar bear is going to need to aim right at the lows. But but the measured move suggests we get below the monthly pivot. So there's lots and lots of room. There's lots and lots of opportunity here. But I'd like to see this, personally, I'd like to see this taken out. The problem with it, if you look at the daily, even though this might well be a lower high, when you go to the 4 hourly, the 4 hourly is a bit of a mess, which suggests that we do have a pattern. You know, when there's this is a little trend going on here, lower high, lower high, lower high, but then bang, it comes up, but then it starts to go again. So when you sort of see this suggests range, and that range needs to be broken. We've got 2 touches here, and we've got multiple touches along the bottom, 4 touches on the bottom. So that range suggests pattern, and that suggests that if we break pattern and retest, then we've got a trade. Okay, so what I'm looking for next week, amongst other things, of course, is a break, a return, and then some sort of price action in here, which would suggest a reversal pattern. So we might even get a little hammer, a little high test bar or something like that. So that would initiate a really nice pattern. You might not get that, but you know, any sort of information here would suggest downside. Okay, so that's going to wrap it really for me, because I don't want to overload you guys with too many things. But the dollar CAD looks like a decent opportunity. We've got the CPI data. That's the driver. So if this breaks down before CPI data, I would want to get in before the CPI data happens and then see if the CPI data gives me my momentum. If it doesn't break down before CPI data, I want the CPI data to drive it down, see if the bulls try and get back up again, and then get in. So it all depends on the price action before CPI. Now, CPI is out on Tuesday. There's not a great deal out from the United States next week. There is United Kingdom has got lots and lots of CPI data as well. So there's also pound trades as well, which might well take you towards the pound dollar. You know, pound dollar could also be a long next week. Now, we haven't analyzed the chart so much on the pound dollar, so you'd need to do that and make sure that you're, you know, same sort of thing. Go to your weekly and have a look at you know, break this one right down and see where is support and resistance. Get your trend lines in. Get your horizontal levels in as well. You know, where is this support and resistance? Where could it go? Problem, look at this, right on top of resistance pretty much. So this is in a sell zone. So it doesn't look quite as attractive as the dollar CAD anyway. But coming back during the week, maybe this gives an opportunity later in the week. You know, this is the pound data is released on Wednesday. Now there's and then there's an interest rate decision on Thursday from the UK as well. There is jobless claims from the United States on Thursday. That's a driver. So you've got 2 drivers to look out for if you're dollar CAD. You've got Canadian inflation data on Tuesday. You've got jobs data for the United States on Thursday. So Tuesday and Thursday. So anybody got any questions? I've got time for questions if anybody's got any questions. Or if they want anything gone over again, more than happy to do that. Or any other comments? Okay, cool. What if the CAD inflation turns out to be lower? Ah, nice question. Great question. Okay. So the question really is, what if the data doesn't help? What if it doesn't help? Now let's have a look. So we're building a case for the dollar CAD long. That's the first thing that we're doing. Now let's just see. Here we go. Right, here we go. Let me just share this. Right, so off the charts to start with. off the charts to start with. What we have here is the period of the 19th of March to the 1st of April, which is next week, and a negative 12.38% annualized return from dollar CAD. This is the dollar versus the CAD. And you can see that, it usually looks like around about the 20th, so the second day in, sharp drop, and it continues actually into April. So a sharp drop in the dollar CAD. So we got a seasonal bias, seasonal thing in our favor. So now when we flip to the charts, then we have got a dollar CAD, which has given us a little bit of information last week from this inside bar, and we're at resistance. So that's all going to help us out. Now, what's going to drive this is economic data. And if we go to the economic data, and what I'll do is I will put this up alongside it and share the whole screen here. If we go to the economic data to help us drive our trade, what's going to drive our trade if we manage to take it, then we get this CPI, core CPI from Canada. Now, if the core CPI comes in hot, now at the minute it's forecast to come in 6.5%, which is pretty high. The one thing about the BOC is that they've stated that they're not going to be raising interest rates next time out. They're quite happy. You are welcome, Robert. See you soon. See you soon. So the core CPI data is a common CPI, sorry, is suggested to come in slightly weaker. So what we need is for that to be much stronger. The question really comes in, if this comes in much weaker, so let's say it drops down to 5.5%, which it could happen, drops down to 5.5%, what do we do with our trade? Well, if I saw that happen, let's say we kind of get this, the best thing really is for us to be in this pattern here. If we're still within this pattern, so a couple of things could happen. If we're within this pattern, that CPI data comes out and it is strong. Sorry, it's 5.5%, so weak in comparison. Then we don't have to do anything anyway. We're okay. But let's say instead of that, what actually happened was, because this is the only danger we might have, this broke down on Monday. This breaks down on Monday, and it comes back on Tuesday. Sorry, it's sometime on Monday, and we managed to get in on Monday, and the trade is sort of like, floating around sort of like here, and then the CPI data comes out and it's weaker than expected. So the way that I would now handle it is to observe, but we don't have to worry too much, because what do we have sitting up here? What do we have at this point here? No. I mean, we do, but what do we have sitting up? Within our trade, what do we do? If we've entered here, what have we got there? Yeah, we got a stop loss. So it's not a big deal. What we're trying to do, because nobody knows what's going to happen with the market. We're speculating. What we're trying to do is add on potential drivers that could help our trade. Now, what we know is that the seasonals are in our favor. That's from historical data. But what's going to help the trade is what's going to happen next week. If we get a setup before the CPI is released, I'm taking it, and I'm going to use my stop loss to my advantage. If we don't, and we're in this zone, it doesn't matter. We can wait for the CPI data. So the only way that our risk, yeah, you got it. So the only way our risk is going to be on the table is if the setup happens before the data release, because I'm going to be in. But the risk is only to our stop loss. So not a big deal. However, if what ends up happening is the CPI data comes in weak, and really then what happens is we get, it spikes, it comes up and it spikes and then comes back in again. Now what I've got is another setup lower, and at that point, I'm going to be reliant on the US data on Thursday coming in weaker than continuing jobless claims, then I'm going to look for a pop in jobless claims. So pop to the upside and see if that data helps me out to the downside. So there's a couple of opportunities, but we do need that data to help us out to really drive our trade. There's no question, and it's got to be in our favor. But the stop loss is there to protect us against anything too bad. You are welcome, Catherine. You are more than welcome. More than welcome. Sometimes what can happen is that the data comes in weaker, and yet the setup still helps. You know, you still get the setup. So even though we are looking for that data to help us out, it may not be the ultimate driver of the market. The market might be so spooked by this banking contagion, it doesn't matter what the CAD's data is. It's just an extra boost really for us. It might be that the dollar CAD's going short anyway, or long anyway. You know, we don't really know what investors are currently sort of shaping up. But it might well be that, let's say, you know, the data comes in and it doesn't help us out, but everybody's decided on a dollar CAD short. We're going to stick with it and see if we can actually get the trade in. One thing I would do is I'd manage it slightly differently if we were in the trade and the numbers come in under our estimation. So inflation's weaker. We've managed to get into the trade here. At that point, we're down here, and then all of a sudden the number comes in weaker. Then I'd move stops straight to break even, just in case it does that and turns around. So there's a few different scenarios. Yeah, it could be. Yeah, it could well be. So a few different scenarios. What you're trying to do is make the trade safe as early as is sensibly possible. You don't want to make it safe too early, so you don't count in the potential fluctuations, but make it as safe as early as sensibly possible. So if price is down here, you haven't quite hit target, you can either close the trade if you're close, or you can move stops to break even if, or certainly within this area here, if that data doesn't look like it's going to help us out. Good question, though. Really good question. Okay. Yeah, sure. We can have a look at. Yeah, we can certainly have a look at gold as well on Monday. Gold's on the way. Gold is on the way, but we'll talk about it. We'll talk about it in Trading Buddies tomorrow for sure. We'll cover gold. I think if we can leave today with one currency pair, which is a decent opportunity, that the dollar CAD short is a decent opportunity, that'd be fantastic. But if anybody's got anything else, then you know, more than happy to hear that as well. You had the CAD Swiss as well, so we'll have a look at that tomorrow in the show. Yeah, no problem at all. Okay, we are. Yeah, no problem. Have a great day too, Catherine. It could be, say, it could be. That's why we need the price action in our favor. Lower high on the 4 hour away. But I've been told we've got a meeting now, so we will wrap it up here. Hope it helps you guys. Have a great trading week. Stay safe. Keep your head. And if you're not, if you're finding things are getting out of control, just step back a bit and see if you can reach out to somebody. All right. Have a good one.